And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alix Steel, taking you to the closing bell. Here with help, it's our global simulcast. Scarlet Fu joining us in the television studio. Carol Massar.
I need help.
Still in the radio booth. Oh, God. Yeah, say it again. And Tim Stenovec, welcome back after a much-deserved time off as we welcome our audiences across all of our Bloomberg platforms. Tim, have you helped Carol out today?
She's helped me. I've helped her.
Yeah.
Always.
Yeah, we're always looking
Big
out
assist.
for each other.
Big assist. Really quiet day here, right? It's like we're waiting for maybe a couple of economic reports. Oh, yeah, we are. A couple of inflation reads and a read on retail, and then we got weekly jobless. So I feel like we're going to jump from data point to data point.
Yeah, CPI, PPI this week, certainly important ones. Not necessarily in that order. Let's go PPI, then CPI.
Nice.
And then next week, of course, Jackson Hole. And, you know, while I was gone, I heard people were screaming about an emergency 75 basis point rate cut.
That's gone.
Yeah,
That's
there were
gone.
some people.
Like I left for a week.
Today.
I left for a week.
A couple of hours on one day.
Crazy.
Yeah. Guys, what happened?
Nothing really, Tim.
Okay.
I mean, if you look at the price of where the S&P closed the day you left, you look at the price of it today, absolutely nothing happened.
Nothing happened.
There was a big freak out, and people have since calmed down. And right now, to Carol's point, there's a lot of anticipation before these big data points. You have volume in the S&P 500 off 25% from the 20-day average.
Yeah, Tim, you definitely picked a good week to go on vacation. I think the city was saying we're looking for about 1% move for the S&P on Wednesday, which would correspond to CPI day. So we'll see if we wind up getting that or picking up at all for the VIX.
All right, not a whole lot of price action today. Just a couple of S&P sectors in the green, but not enough to really elevate the index overall. And S&P 500, as we wait for these numbers to settle, is basically going to close out the day unchanged. The Dow Jones Industrial Average is decidedly lower by more than 100 points, or 0.3%. The NASDAQ Composite higher by 0.2%. And when we take a look at the small and mid-cap space, we did have meaningful moves lower. S&P 400 mid-caps down 0.7%. The Russell 2000, Carol, down 0.9%.
All right, back to the S&P 500 I go, and you've got most names in the index lower today. 340 names losing ground on this Monday. 160 Scarlet to the upside.
Yeah, and with the S&P 500 unchanged, it's really interesting to see the breakdown in the sector groups, because you'll note that there's 11 sector groups and 8 of them are in the red. REITs, communication services, and consumer staples are the biggest decliners there. Technology is the main reason why the S&P 500 is unchanged. It's up 0.9%. Energy also holding up its end of the bargain, gaining about 0.5%. Utilities, which have become a favorite safe haven, up by just 0.2%.
All right, guys, to the individual gainers we go. NVIDIA, it's a top gainer on both the S&P 500 and NASDAQ 100 on this Monday, up about 4% here at the close today. B of A making it one of its top rebound stock picks, outlining why a rebound scenario makes sense for the semi sector. And if the semiconductor sector bounces back, NVIDIA stock looks like a good play. And he assumes a sector rebound. He says likely in the fourth quarter of the year. Seasonal headwinds could fade by then. And so let's not forget that NVIDIA does report earnings at the end of the month later on. So liking this name, and so we did see a pop in it. Starbucks also trading higher, though at its highs about 4.5% today, finishing the day with about a 2.6% gain. The Wall Street Journal reported that activist investor Starboard Value has taken a stake. Starbucks discussing a settlement with Elliott that would give the activist investor representation on the board. That, according to people familiar, Elliott in addition wants Starbucks to commit to reviewing its business in China. So that was definitely out there. I saw you guys talking about it earlier.
Did you know they were selling boba tea?
What's boba tea?
That's with the
boba tea with the
bubbles.
little
Oh, the bubbles? I don't get that.
The tapioca pearls or whatever.
It's a thing from Taiwan. It's taken off in the last couple of years.
My daughter loves it.
Kids love it.
Yeah. Well, it's sugar.
Adults too,
Yeah,
Tim.
exactly.
Boba.
Sugar.
Really?
Yeah, adults love it too.
Our producer Meredith says boba is the best. All right, so KeyCorp, that was your number one gainer in the S&P 500 today, folks, up about 9%. And we did see this after receiving a minority investment from Scotiabank. So definitely sending that one higher. All right, Tim.
There were some notable decliners today. Do you want to start with JetBlue? Shares just got slammed today, falling 21%, the biggest drop on record. This after JetBlue announced that it kicked off a $2.7 billion bond and loan sale backed by its loyalty program. JetBlue looking to raise reserves and fund general corporate purposes. Meanwhile, Moody's Ratings and S&P Global Ratings both downgraded the airline to one notch above CCC levels. The company did say it plans to sell $400 million of 5-year convertible notes to repurchase some of its convertibles due in 2026. This according to people familiar with the situation. Shares, again, down 21%, the biggest drop on record. Another notable decliner, B. Riley Financial, ticker RILY. Look at this, falling more than 50%. A new round of write-downs amid a widening U.S. investigation into whether it gave investors an accurate picture of its financial health. The SEC assessing whether B. Riley adequately disclosed the risks embedded in some of its assets. This according to people familiar with the matter. And finally, keep an eye on shares of DJT, Trump Media and Technology today. The former president is back on Twitter after many months away from the platform. He's also got a conversation tonight with none other than Elon Musk. The company did report earnings after the bell on Friday. They reported a net loss for the second quarter of $16.4 million and revenue of about $840,000. The market cap's still $4.8 billion. I think many people would argue that it's not necessarily driven by fundamentals. The stock down by about 5% today.
Shocked. I tell you, shocked, Tim, not by fundamentals. I'm taking a look at the bond market here. It actually is interesting. We are seeing a bid. Earlier this morning, it was a whole lot of nothing, but now seeing a bid, particularly in the front end. Yes, we have the economic data coming out this week, but we also have that geopolitical risk coming in as well. Headline after headline about potential Iran retaliation to Israel, U.S. moving ships into the area. So, there's that percolating potentially also in the bond market, guys.
Yeah, amazing to see all those 4% levels, right? Like if you go back a week ago, pretty wild.
Yeah.
All right, guys, one thing that certainly caught our attention, and this has to do with consumers, that they are increasingly concerned about falling behind on their bills. And then you've got delinquency expectations rising to the highest level since the onset of the pandemic. This is coming from the New York Federal Reserve Bank.
Okay, so let's talk numbers here. The average likelihood that consumers would miss a minimum debt payment in the next 3 months rose to 13.3%. It's the highest level going back to April of 2020. This according to the Fed. The survey released today, the Federal Reserve Bank of New York. The stress increased the most for people earning less than $50,000 a year and for those with a high school degree or less.
And this tracks with all the anecdotes we've gotten over earnings season with consumers not spending as much on traveling, on hotel stays, and on discretionary items this summer, certainly compared to last summer, which felt like a high watermark in terms of spending.
Yeah, and we'll get, of course, another read, I guess, when we get those University of Michigan sentiment data numbers later this week here. And I guess it gets to this idea here of what the real read is on the economy. Alex, is it really about the data or is it about how people feel?
Yep, and it's K-shaped, right? So if it's K-shaped, then how do you deal with that if you're the Federal Reserve and dealing with sentiment and also the data when one area is doing poorly and one area is doing really well, as Scarlet will tell you in this next segment.
Very nice segue, Alix Steel. There's a good story on the Bloomberg.
Was coming.
Yeah, exactly. About how certain home buyers are picking up some property, some seafront property, beachfront property in places where water is rising and their property may not even be around in 5 years' time as long as the water level is rising. You can buy a Cape Cod house for, get this, $395,000 compared to what it was selling for initially, which was $1.195 million in 2022.
Wow.
Yeah.
That is a serious discount.
Yes.
But there's a catch.
Well, I guess that's the question is, how much does it cost to insure it?
Well, it actually costs more, definitely, but is it going to be there? Is a bigger issue.
That costs like $1.6 million to insure. I thought it was an interesting story because I had a family member who did something similar, bought a coastal home, someone who's in retirement age, and it was the same attitude, which was like, you know what, by the time this thing washes offshore, I'll be long gone, and it's somebody else's problem then. So yeah, I guess so.
Yeah, well, I mean, this is what this guy that's profiled in the story, right? He's like, life's too short. So what if it's gone in 10 years? I'll have 10 years of a beachfront property that I couldn't have afforded otherwise. It's pretty wild. But it says something more broadly about what's going on in terms of climate change.
Yeah, Nantucket, an island that's known for multi-million-dollar compounds. There was a seaside house sold in June for just $200,000. That's just a tenth of its assessed valuation. So the likely, market valuation, if it weren't about to wash away, would be much
so they
higher.
say they still got to pay the taxes on the $2 million.
They still have to pay the taxes, but you can't get a loan on these things, right? You can only pay cash for these homes because no bank is going to underwrite this loan.
I just feel like this is a perfect example of the two stories we just talked about. Like one story is about how consumers have revolving credit and there's worries about delinquency, and the other one is like, hey, let's drop $200,000. It's a really big deal. I mean, it's a great deal compared to over $1 million. Let's do it and stay there for 10 years.
K-shaped, right? Where's Peter Atwater when we need him, right? Like, it says so much. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We will see you again. Alex is heading out. Scarlet and Romaine continuing on TV. And Tim and I are going to get back to work here on Business Week on Bloomberg Radio. But we will all see you same time, same place tomorrow.